Thank you, Taxmann, for inviting me to deliver this talk, a little presentation on the Threadbare discussion on Clause 44. I also welcome all viewers through Zoom as well as through other social media channels from where they are seeing this presentation, seeing this little webinar. Friends, we all know that Clause 44 was introduced 3-4 years back, but it was deferred till 31st of March 2022. So now, after 31st of March 2022, this Clause 44 needs to be complied with by all businessmen whose accounts are going to be audited under Section 44 AB. So our today's webinar will cover these topics. First of all, we will understand what is the applicability of Clause 44. Then we will see and understand what are the final points which are being covered by Clause 44. What kind of information we require in our Form 3CD, our tax audit report, to be furnished. So within Clause 44, what is the meaning of the expression total expenditure? What does it include? What does it excludes? Are there any exclusions being recommended by the Institute of Chartered Accountants of India through its Guidance Note of 2022 editions, right? What about provisions and accrued expenses in Clause 44? Then consolidated details or account-wise details to be furnished, whether do we need to furnish account-wise detail or whether we need to furnish consolidated details, and so on and so forth. And then Clause 44 vis-a-vis, we will see what are the line items in a profit loss account, which basically needs to be examined as far as Clause 44 is concerned. Then insight into ICAI Guidance Note on tax audit being issued by the Institute of Chartered Accountants of India. And we will also look at provision of Section 35 as well as Rule 56 of CGST. First of all, we all know that Clause 44 is applicable to all Form 3CDs which have to be issued on or after 1st of April 2022. There was a myth that since this Clause 44 has been deferred till 31st of March 2022, so any financial year in respect to assessment year 22-23 will not be covered, or basically Clause 44 shall not be applicable for financial year 21-22 also. But my dear friends, this is not the case. So any audit report issued after 31st of March 2022 needs to be complied with Clause 44 first. Second, if I look at para number 82.16 of Institute's Guidance Note, it says in very clear terms that the reporting under Clause 44 needs to be qua PAN, not GSTIN. Not GSTIN. There may be a situation where one company or one assessee might have multiple GSTINs, but that does not mean that you have to there is a message from Mr. Kamlesh that there is no volume or audio not available. Is it with him only or other participants also? Can you please let me know through the chat window whether the volume is not appropriate or you are not able to listen to me? So I believe the issue of this volume is with Mr. Kamlesh only. So Kamlesh ji, may I suggest that you may kindly log off and re-log in. So there might be some issue with your device. So coming back to the presentation. So para number 82.16 of the guidance note says that reporting is qua PAN, not GSTIN, not GSTIN. Similarly, there may be some situations whereby your assessee or your auditee is not registered under GST. So please appreciate that this applicability of clause is qua expenses, not your outward liability. So there may be a situation that your auditee or your client might not be registered under the GST, but at the same time, you see the applicability of the clause 44 is on the expenses, not your supply, not your outward supply, not your sales. So irrespective whether your assessee is registered, whether your assessee, even though registered, is engaged in a taxable supply, exempt supplies, irrespective of that fact, you need to report. If you are issuing a Form 3CD, clause 44 is applicable, whether your client is registered under GST or not. What is important is the supplies, the inward supplies, whether those supplies are from registered suppliers or unregistered supplier. And then if we have to bifurcate further the registered supplies, then we have to bifurcate into exempt supplies from composition supply and so on and so forth. That we will deal in the later part of this presentation. So what clause 44 says? If I read clause 44, the title of the clause 44 says breakup of total expenditure of entities registered or not registered under the GST. So what it is asking about, it is asking about the breakup of the total expenditure, and then further an expenditure which is in relation to the entities which are registered under GST or not registered under GST. So this is the title of the clause 44, my dear friends. If I go further down the line within the clause 44, there are 7 columns. The first column is serial number, so you just have to ignore that. Column number 2 says, the title of the column number 2 is total amount of expenditure incurred during the year. Total amount of expenditure incurred during the year. Then column number 3, expenditure in respect of entities registered under GST, right? But what kind of expenditure? Expenditure in respect of entities registered under GST in relation to goods or services exempt from GST. Then an expenditure in relation to entities which are registered under GST, but those registered entities are under composition scheme of GST. And third, the rest of the amount, right? So let's say there is a total expenditure of 500 rupee, right? So out of those 500, you have to basically segregate that what amount of 500 is in relation to suppliers who are not registered under GST, and what amount of 500 is the amount which in relation to the suppliers who are registered under GST, right? So let's say out of 500, I have segregated 400 is the amount which is in relation to my suppliers who are registered under GST. So out of those 400, I have to resegregate or into sub pockets. The first pocket out of that 400 is in relation to an amount or supplies or inward supplies on which no GST was levied because it was exempted from GST. You see, again, we have to understand what is exempt supply, what is no supply, or what is a non-taxable supply. I will deal this aspect in for 2 or 3 minutes in the later part of this presentation. Then out of those 400, once you have segregated out of those 400, what is the exempt supply, you just separate it out. Then let's say the balance amount is 300. So out of these 300, you have to again identify how much is the amount which you have received or the expense which you have incurred with an entity who is under composition. So let's say out of 400, 200 you have segregated, 300 is the balance, and out of 300, 100 is the amount which is in relation to composition supplier. So 300, 200, and then 100, and the balance out of 400 is the residual amount which you need to fill in column number 5. And then there is a column number 6. Column number 6 is nothing. It is basically a sum total of column number 3, column number 4, or column number 5. Or you can say, in other words, column number 6 represents the total amount of expenditure in relation to entities registered under GST, right? Initially, we had segregated 500 rupee of expenditure, right? We said that out of 500, 400 in relation to GST, the suppliers who are registered under GST, and 100 is the amount which is in relation to suppliers who are not registered under GST. So this 100 rupee we need to disclose in column number 7. So taking an example of 500, let's say 200 is in relation to exempt supply with GST registered suppliers. It may be possible that the supply which you are getting from an unregistered supplier, it may be exempt, it may not be exempt, right? So the once you have figured out that this supply is in relation to unregistered supplier, then whether that supply is registered or unregistered, it doesn't make any difference. That entire amount of supply needs to be reported in column number 7 only. So out of 500, 200 registered exempt, right? 100 registered but composition, and 100 registered but taxable. Moving further. Now, if I look at section 35 of GST Act, which talks about accounts and other records which a registered person needs to maintain, right? Now, there may be a situation that your client is not registered under GST, right? So frankly speaking, 35 at all is not applicable to him, right? Similarly, Rule 56 will not be applicable to that client. But barring that situation, if your client is registered, which generally may be, then that client under GST is required to maintain two types of accounts under section 35. First, inward supply of goods or services. You see, there are many items under section 35, but I have picked up only those items which are in relation to our today's presentation. So inward supply of goods and services above. So what does it require? Section 35. Section 35 says, my dear friend, you need to maintain an account. When I say account, it does not mean that it has to be in the form of a register. Account means your financial books also. So in your financial books of accounts, you have to maintain one account in relation to all kind of inward supply of goods or services or both, right? But it does not tell you whether that account needs to be further segregated into exempt supplies, taxable supplies, supply from unregistered suppliers, or that final registered taxable supplies. It only talks about one thing, and that there should be an account in relation to inward supply of goods or services. Clause 3, section 35(1), clause D. Input tax credit avail. So basically, in simple words, ITC account needs to be maintained in your financial books of account. Again, this is all section 35 talks about. But if I see Rule 56, again, if I read Rule 56(1), it only talks about a separate account in relation to import of goods or import of services, right? Or import of services. So if I now resegregate my inward supply account, so that needs to be segregated into two parts. One is your import of goods, import of services, and second is your domestic purchases, right? So non-domestic and domestic, that's it. Again, it does not specify, Rule 56, whether these domestic purchases needs to be again in the form of exempt supplies, non-exempt supplies, composition, unregistered, nothing. In the similar way, if you are registered under GST, you need to maintain a record of stock. So again, if I read Rule 56(2), it does not talk about whether these supplies you need to record composition supplier wise, registered supplier wise, or unregistered supplier wise. Nothing. Again, it only talks about inward movement or outward movement of the goods. If you are inwarding any goods, you need to record there. If you are outwarding any goods, you need to record there. That's it. Similarly, Rule 56(4) shall keep and maintain an account in respect of ITC claim. ITC availed is already covered by section 35. So it says ITC claim. And now it is talking about register for the very first time. A register of tax invoice, again, only a tax invoice. My dear friend, if somebody is giving you a tax exempt supply, they don't issue a tax invoice. They only issue you a bill of supply. If a composition supplier is giving you some kind of goods or services, it will only issue you a bill of supply. And on top of that, which is very important to identify whether the supplier is a composition supplier or not, a composition supplier has to mention on its bill of supply, that he is registered under GST and he has opted for a composition. So that's how you will get to know that whether your supplier, even though is registered, whether it is covered by composition or not. That's how you will identify. But as far as exempt supplies are concerned, only bill of supply is issued, not tax invoice. So tax invoice can be issued by a supplier where supply is first of all taxable. There has to be a levy on those supplies. Tax has to be charged, and again, those supplies or that supplier must not be a composition supplier. So it only talks about a tax invoice register. But this is very crucial. This Rule 56(5). Even if your supplies are exempt, you are getting supplies from a composition supplier, you are getting supply from an unregistered supplier. But as per Rule 56(5), you need to maintain a detail or an account or a particular of all the suppliers with the name and complete address of supplier. So this will help to figure out whether a particular expense is from a registered supplier, unregistered supplier, so on and so forth. So let's say you are using some accounting software, let's say Tally or let's say BBC or something else. So generally what we do is, again, it all depends how do you do your accounting, right? So let's say there is an expense. What I generally do is I basically debit the expense side and credit my supplier So if you take a dump out of that Tally or Busy or any accounting software, you can use Excel, and using this list under Rule 56(5), you can figure out which expense is related to registered supplier and which expense is related to unregistered supplier. Now, inclusions and exclusions. If I read para number 82.2 of my Chartered Accountants Guidance Note, Institute's Guidance Note, it says that the depreciation under Section 32, a deduction for bad debt under Section 36, which are not expenses, should not be reported under this clause in any of the column number 3 to 7. So basically, Institute is saying that depreciation is excluded for reporting purpose. Bad debt is excluded for reporting purpose. Why? Because both these line items are not in the nature of expenses. These are allowances. So allowances should be segregated, and this should not be reported in clause number 3 to 7. But at the same time, my dear friends, whatever tax position you are taking, you must disclose that tax position in your Form 3CD by way of note. Similarly, para number 82.3. Schedule 3 to the CGST Act list out activities or transactions which are not treated either as supply of goods or as supply of services. So again, if any expenditure is in the nature of no supplies, so again, those needs to be excluded. So the very common example, if I read Schedule 3, the very first line item also is in relation to remuneration paid to employees. If employees providing you service, obviously it's a supply bearing Schedule 3, but Schedule 3 says no, it is not a supply because it is mentioned in Schedule 3. That is why it is not a supply. So any item appearing in your profit loss account of expenditure nature, if it is appearing in Schedule 3 also, it is covered by Schedule 3 also, those items also needs to be excluded. Now, the question comes is, do I need to report only revenue expenditure which is appearing in my profit loss account, or also I need to report my capital expenditure also? So as per para number 82.15, both revenue as well as capital expenditure needs to be reported in your clause number 44. But at the same time, institute says that while reporting revenue and capital, they must be segregated and they must be reported in two line items in your clause 44, right? In clause 44. Now, very interesting. You see, if I look at table number 44, I'm saying table number 44, it means the table prescribed under clause 44. So for ease of reference, I'm referring it as a table number 44. So if I look at table number 44, there is column number 2 also, 3 to 7 also. So this guidance note, para number 82.2 to 82.3 only talks about column number 3 to 7. But on column number 2, it is silent. So what treatment we need to do as far as column number 2 is concerned, I will take it up in the later part. So what is schedule 3? What it says? It says services by an employee to the employer in the course or relation to his employment. Article number 2 and 3 of schedule 3, I am excluding it because it is in relation to member of parliament, or it is in relation to courts. So it may not be of interest to all of us. That's why I have excluded it. Item number 4, services of funeral, burial, crematorium or mortuary, including transportation of the deceased. 5, sale of land and subject to schedule 2, sale of building. Why it is subject to schedule 2? If let's say you are buying an under constructed building that is covered by schedule 2 and it is treated as services, that is why that building is taxable under GST. But let's say if you are buying a complete building, right, after the obtaining of OC and so forth, right, there are certain conditions in clause B of paragraph 5 of schedule 2. So if you are buying building as it is from somebody, let's say I have a building and I sell it to you, so that is not covered by GST, and basically it is called as no GST supplies. Similarly, if you are buying something, let's say from USA and supplying it to Japan, right, without coming those goods into India, so that is covered by entry number 6. It is also called as high C sales. So if there are high C sale, obviously there would be a corresponding high C purchases also. So again, those purchases are excluded by schedule 3. And similarly, if you look at item number 8, supply of warehouse goods to any person before clearance for home consumption, supply of goods by the consignee to any person, by endorsement of document of title to goods after the goods have been dispatched from the port of origin located outside India, but before clearance for home consumption. So it may be possible that let's say Mr. A has bought goods from China, right? Before it arrived in India, I approached Mr. A and bought those goods from him, right? So these kind of supplies from Mr. A to Mr. B is also covered by schedule 3. But that does not mean that those supplies, when they arrived in India for home consumption, GST will not be charged. GST for A, it can be an outward supply which is not a no supply, but when it arrives in India, when it passed custom barrier and it arrives at ultimately my warehouse or shop or whatever it may be, I need to pay GST under the Custom Act. So then it will become taxable. So if I summarize what to include and what to exclude, looking at the guidance note of our Institute of Chartered Accountants of India. So any item which is in the nature of allowance, bad debts, right, depreciation, those needs to be excluded in 3 to 7. But again, you need to maintain some kind of reconciliation also. If you, let's say you start with profit loss account and you ultimately arrive at some figure, what are the items you have excluded out of that? There must be a reconciliation, right? You should maintain it. And Institute's Guidance Note also says that there should be a reconciliation available with the auditor also. First. Second, items which are not in the nature of expenses, right? Items which are not in the nature of expenses. And third, items which are not at all called as supply. Those may be expenditure. Those may be expenditure. Let's say, for example, salary, if I talk about. Salary is an expenditure, but because of schedule 3, it is not a supply. So again, those items needs to be excluded as well. Very interesting. Para number 82.1. It starts the very first para as far as clause 44 in our Institute's Guidance Note. It says that the heading of the table starts with the word breakup of total expenditure. Since it talks about total expenditure, therefore you need not give line item wise detail in clause 44. Only a consolidated amount needs to be given, bearing para number 82.15, which says that the revenue and capital expenditure needs to be segregated. So if I talk about, let's say there are 15 line items within revenue expenditure, you just need to consolidate the amount basis column number 3 to 7 and report that consolidated amount in your clause 44. Similarly, there may be a situation that within the capital expenditure, there may be n number of line items. Let's say you have purchased a car, right? It's a capital expenditure. It is also taxable. You have purchased a building from a builder, which is an unconstructed building. Again, it is a capital expenditure. So there are two type of line items there: purchase of car and purchase of building. I'm talking about the taxable building only. So that amount also needs to be disclosed in clause 44 as a single consolidated amount only. You don't have to disclose two line items separately, one for car and one for building, the combined amount only. But as far as revenue and capital is concerned, these are two line items as far as Institute's guidance note is concerned. Now, the question is what to do with provisions and what to do with accrued expenses. So where is provision defined? Provisions are defined in our accounting standards. So right now, though there are three set of accounting standard, one is accounting standard for companies who are covered by accounting standard rule 2021. One set of accounting standard is issued by our institutes, right, which is generally also called as IGAP accounting standards. And then there is India's. But if I look at IGAP and the accounting standard under accounting rule 2021, their parameters are similar. So I have only considered two counting standards here, definition from these two counting standards here. India's 37 says provision is a liability of uncertain timing or amount. So basically, when you are making a provision, you are not certain what is the amount. So ultimately, what you do, you need to fall back to the estimation method, right? Similarly, you don't know when this amount will actually incur. So that is those items are called as provisions. Audit fee payable, it is not a provision, my dear friends, it is an accrued expense. And if you also look at India's 37, it says provisions can be distinguished from other liabilities such as trade payables and accruals. Why? Because there is uncertainty about the timing or amount of future expenditure required in settlement, right? Let's say, for example, provision for warranty. I know I have to pay for warranty. Let's say I've sold some product to you. I have given some services to you, and I've also showed that for the next 1 year, if there is any kind of problem as far as those supplies are concerned, I will provide you the support. So it can be called as warranty. It can be called as post-sale support also. So there may be some expenses in relation to those, right? It may occur. It is a contractual liability, but how much I will pay, when I will pay, I really don't know. It may happen tomorrow. It may happen. It may not happen at all. It may not happen at all. So this is the difference between a accrual and provision. So if I talk about accrued expenses, the provisions are separated by their respective degree of certainty. So accrued expenses that have already been incurred. Now the word is incurred but are not yet paid, So if I talk about audit fee provision, which generally we call it as an audit fee provision, is it a provision? No. Is there any uncertainty that audit fee shall be payable or not? Is there any uncertainty regarding the timing? Is there any uncertainty regarding the amount? No. You very well know that this much amount I have to pay to my auditor. So it is an accrual. It is not a provision, right? So I have made some list of examples as far as provision are concerned or accrued expenses are concerned. So provision for warranty, provision for gratuity, provision for leave encashment, provision for long service awards. These items are actually provisions. And if I look at gratuity provision, leave encashment provision, all these provisions are made only purely on the basis of estimation. You approach actuary Actuary basis your experience, past experience, the life of the employees, the expected manpower turnover ratio. It may also change. Let's say if you're in your industry, there is a manpower turnover ratio 15%, and in some another industry there is a manpower turnover ratio of, let's say, 5%. Actuary valuation would be different, right? It's based on some statistical methods. But at the same time, if I look at audit fee, electricity, telephone, salary, these are the normal expenses which generally I have seen appearing in balance sheets as provisions, though these are not provisions. These are accruals only. These are accrued expenses only. So as far as provision is concerned, in my opinion, this is not a supply at all. This is not a supply at all. I need not include it. But at the same time, I will suggest, if you're taking this position, which I am taking, for example, you should disclose this position in your 3CD, Similarly, audit fee. Let's say if somebody is paying audit fee of, let's say, 2 lakh of rupee to Deepak Bhholusaria, and Deepak Bhholusaria is signing that balance sheet, obviously he will make a provision, audit fee debit to provision, or audit fee payable, or whatever you call it. Doesn't it mean that this amount needs to be paid to me? It is. Isn't it a supplier of that service identified? It is. So basically, it is an expense which we also call as accrued but not due. Right? Because of cutoff, you need to make some accruals also. That is because it is the basic fundamental of accrual accounting. Now, what is exempt and what is non-taxable supply? Again, there is a confusion in minds of many people. There is also one term which is generally used. It is called as no GST supply. No GST supply. Now, my dear friend, first of all, no GST supply, this expression has not been defined anywhere in entire GST Act, whether it's State Act or Central GST Act or IGST Act or any union territory GST Act, or even rules also. You see this reference of non-GST you will find only in GSTR 9. And that's how it originated, non-GST. And now, as per department's view, even Schedule 3 is part of non-GST, right? Even exempt supply is part of non-GST. Even non-taxable supply is part of non-GST. But my dear friend, there is a marked difference between exempt supply and a no supply. And we have already seen that no GST supplies, or no supply, I will call it, rather than calling it as a non-GST supply, no supply under Schedule 3, it needs to be excluded. But it may not be the case with non-taxable supply. So within non-GST, there may be no taxable supply also. And it may also include a no supply. But only no supply needs to be excluded. But as far as non-taxable supply is concerned, it needs to be included and to be reported in clause 44 also. Before I go to exempt supply definition and non-taxable supply definition, we first need to understand what is levy, section 9. Now, section 9, subsection 1 says, subject to the provision of subsection 2, which I have also mentioned here, there shall be levied a tax called the CGA, Goods and Services Tax, Central Goods and Services Tax, and similar language has been deployed in respective state act also, on all interstate supply of goods or services both, except for the supply of alcoholic liquor for human consumption. Now, if I talk about supply of liquor for human consumption, generally it is called as a no GST supply, right? They say, oh, there is no tax on alcoholic liquor. But my dear friend, it is a supply. First of all, it is a supply. Only the levy on that supply has been deferred. So the items which are supplies, you see, Schedule 3 is out of the supply picture at all. But alcoholic liquor is concerned, petroleum, crude, high-speed diesel or spirit or petrol, you can call it. These are the items which are not covered by Schedule 3. These are the items which are known as goods also. These are the items which are part of supply definition also. These are supplies. But since levy has not been there, it has been excluded by section 9 specifically. That is why these kind of supplies are called as non-taxable supply. So section 278, which says means a supply of goods or services or both, which is not leviable to tax. So there has to be a supply first of all. But if I talk about schedule 3, there is no supply at all. So if there is no supply, there is no question of levy also. But if there is a supply, there will be a levy. But because of section 9, levy has been excluded, and that's why it will form part of non-taxable supply. But at the same time, exempt supply, section 247, it says exempt supply include 3 things. First, the items on which, or I should say, the supply on which rate of tax under GST is 0%, supply on which there is an exemption under section 11, supply on which is called as a non-taxable supply. So reading 9 with 278 and 247, petrol is a non-taxable, or basically you can say exempt supply. Supply of alcoholic liquor, it is a exempt supply, right? So if I now look at certain line item, again, my dear friend, it is only a sample list. Your examples can be hundreds, it can be 200s, but I am generally taking those items on which there is some kind of confusion, right? So first of all, if I look at high C sale purchases, since I've already explained to you, if there are high C purchases, high C sale purchases, which you are again using for high C sale also, it is covered by schedule 3. Since it is covered by schedule 3, there is no reporting required in column number 3 to 7. It is an exclusion. Remuneration to employee, covered by schedule 3, it is an exclusion. Depreciation, already said by the Institute of Chartered Accountants of India, it is in the nature of allowance, so it needs to be excluded. Petroleum, I have already explained in the previous slide, it is an exempt supply. Now, the question is, it is an exempt supply, so where should I disclose it? Should I disclose in column number 3, or should I disclose in column number 7? You see, generally, petrol pump vendors, right, petrol pump owners, it is not as if that only the petrol pump they supply other items also on which GST is leviable. So because of that, they also needs to get themselves registered under GST. So I will say with impunity that 99.99% more these petrol petrol pump owners will be registered. So it should be, again, it all depends on the evidences available with you guys. So it should be disclosed under column number 3, exempt supply. Electricity supply, again, it is an exempt supply. And if you look at invoices of any power distribution company, you will also find the GST registration number. If let's say I take an example of NDPL in Delhi, on the last page, in the back page, on the back side of the last page of the bill, you will find its GST number also, right? So it again should be reported in column number 3. Cash discount, I have given some supplies to you. You made some payment on time. I gave some kind of discount to you, cash discount. So it is not a supply at all. It is not a supply at all in my view. So it should be excluded. Inward return of goods, I supplied something to you. Let's say after 5 months or 6 months, you supplied those goods back to me. But at the time of supply, rather than exchanging credit notes, you said, boss, I need not credit note. I will simply issue a tax invoice in your favor. I said, okay, no problem at all. So you issued a tax invoice. I claimed ITC on that, but that does not change the character of the transaction. It is still a sales return. If you kindly read Institute's guidance note, not only on tax audit, but even the technical guide on the 99C, you will also find the reference of this particular line item. And it is very clearly said, it is a sale return only. It is a sale return only. So that should be reduced from your sale only. But let's say you have disclosed it as a purchase, hypothetically, let's say, then obviously it's a supply from a registered supplier, and only column number 5 shall be the right column. Interest paid to bank, right? Interest paid to bank is a supply, and it is exempt supply, and banks are registered. So that's why it will be a exempt supply to be reported in column number 3. Interest paid to loan to individual. We have understood that any interest paid to a bank, it is an exempt supply. But at the same time, if you're paying interest to some individual against loan, it is also exempt. But only difference is you need to see whether that supplier or that individual is registered or unregistered. If it's registered, column number 5. If unregistered, column number 7. No column number 3. Oh, sorry, either column number 3 or column number 7. Sorry, my mistake. 3 or 7. Foreign exchange loss, again not a supply, excluded from 3 to 7. ESI EPF expenses, you pay ESI to the ESI authority, you pay EPF to the EPFO. In my view, it is not a supply. Fee for trade license, very important item. If you look at the scheme of GST, even Government of India is included within the GST scheme, right? Though there are certain exemptions available to that. Right? But at the same time, there are certain services on which there is no exemption, but those items are covered by RCM. If you look at the notification of RCM, there is an exemption, or read with exemption notification. There is an exemption up to 5,000 rupee only. So any inward supply from a government, which is a supply under the scheme of GST, in my view, trade license is a supply, but up to 5,000 it is exempt. Beyond 5,000 it is taxable, and you need to pay RCM also. And since Government of India, in that particular case, I believe it should be an unregistered supplier, so that should be reported in column number 7 only. Import of goods or services. Now, very interesting. You see, the point of view of seeing whether the supply is from registered or unregistered is from the point of view of your supplier only. There may be a situation that your supply is unregistered, but you are paying taxes under RCM. Supply is taxable, supplier is unregistered. That does not change the fact that this supply is from an unregistered supplier only. So if you look at import of goods, your supplier is always unregistered. Even though you are paying IGST under the Custom Act. That does not mean that the supply has become a supply from a registered supplier. It shall always remain as unregistered. But at the same time, there may be a situation, let's say you are exclusively into some items which are only being imported. So there may be some kind of apprehension in your mind that if you disclose entire purchases as unregistered, there may be some chances from questioning from the department. There may be some chances of scrutiny and so on and so forth. So you see, I can't change the reporting, but I can only suggest you that in that case, you should give a disclosure in the form 3CD that inward supply from unregistered supplier also includes supplies of import of goods, import of services. There may be a situation that supplies from a GTA. Again, GTA can be registered, GTA can be unregistered. GTA registered, there can be RCM. GTA registered, there can be FCM. If GTA is unregistered, it will always be RCM. So if you are paying an RCM to on account of supplies which is from a registered GTA, it needs to be reported in column number 5 only. If you are paying RCM on account of GTA who's unregistered, it needs to be reported under column number 7 only. But again, I will suggest that you give your tax position in your 3CD. Royalty payment to government, taxable supply of services, you need to pay tax RCM on that. But since it's a supply from an unregistered supplier, it should be reported in column number 7 only. Now, initially I told you that guidance note only talks about column number 3 to column number 7. It doesn't talk about column number 2. Now, there is an interesting twist here. If you read para number 82.14 of our institute's guidance note, it says that it should be ensured that the total of column number 6 to 7, right? Basically, column number 6 to 7 is the sum total of 3 to 7 only. 3, 4, 5 is equal to 6, and 6 plus 7 should be equal to 2, bearing those exclusions which we talk as far as recommendation para number 82.2 and 82.3. So if I summarize it by way of formula, you can say the column number 6 plus column number 7 plus all the exclusions which we have discussed, allowances, no supplies, right, no expenditure, blah, blah, blah. All these 3 items must be consolidatedly reported in column number 2 only. But I raise a question before the institute. You say depreciation and bad debts are not an expenditure as far as column number 3 to 7 is concerned. But you see, the similar terminology has been used for column number 2 also. So do you want to say that for the purpose of column 3 to 7, expenditure is different, and for column number 2, it is different, right? So that's why there is again two school of thoughts on this. Some says you should not disclose again those exclusions in column number 2 also. So if you are taking that kind of position, again, I will suggest please disclose it. Please disclose it, because it is not as per guidance note. And being a chartered accountant, we all know that we have to follow guidance note in totality if we are going in as an exception to guidance note. So exception, as an exception, we should, if there is an exception, we should disclose the reason behind that exception. So if I summarize it, taking an example, let's say expenditure as per profit loss account and my capital expenditure, let's say the total expenditure is 120. So as per guidance note, it says that this entire 120 you should disclose in column number 2. Now, out of that 120, let's say there are certain items which are of no supply nature, allowances, depreciation. I will admins of Taxmann, I think recording has been stopped. I really don't know whether it is auto stopped or it has been stopped at your end. Please look into it. Anyway, so depreciation allowances which are excluded, right? You need to, let's say you start with 120, then you exclude these depreciation allowances, so and so. Let's say the amount is 20, so the balance is 100 rupees. So that 100 again needs to be segregated, right? Which I have already explained in the very beginning using example of 500. Using 500, I explained 200, 100, 100, and 100, right? Similarly, 100 can be resegregated into 70, 30, and 70 can be further segregated into 10, 20, and 40. So it is one of the sample notes I have prepared. Let's say whatever position I am taking. So let's say SSC has informed auditors that expenditure relating to entities not registered under GST includes import of goods, import of services, and services from unregistered suppliers on which GST liability under RCM has been discharged. It is one of my disclosures. So I am giving you a sample. You can use this, or as the situation may warrant, you can devise your own note also. SSC has further informed that the difference between clause 2 and sum of clause 6 and 7 is on account of depreciation, bad debt, and expenditure like salary, which is not a supply as per GST. Also, total expenditure as per column number 2 includes capital expenditure. So with this, my presentation comes to an end. Now I will take up questions which are here. Sir, when a company has a presence in overseas by way of overseas branch and incur expenses purchases locally in abroad, for the purpose of account consideration, this would have been included in India. Where do we represent these purchases? Sir, in my view, since it is not covered by GST, these should be excluded in 3 to 7, but at the same time, there has to be a note. But again, it is only for 3 to 7. Is books of accounts required to be maintained GST wise? If you look at, sir, provision of section 35, it talks about certain books of account which needs to be maintained on GST and level. And more on this, you can read in issued background material on GST as well as technical guide on GST 9 and 9C. I have already explained this, that expenses need not be reported line wise. It has to be reported as a 2-line item only. One is on account of revenue expenditure and second is on account of capital expenditure. I have already shared this PPT with Taxmann. I believe they will be sharing this PPT with all of you. I have also, Sushilji, I have already explained the situation. You have raised the question where that depreciation under section 32 and bad debts needs to be excluded from 3 to 7. Now, whether these needs to be included in column number 2 or not. I have already said that as per institute, it needs to be included in GST column number 2. But in case you are taking a position which many colleagues are taking, that it should not be reported in 2 as well. So whatever position you are taking, you please disclose that position in your notes. सुशील कुमार डालमिया जी ने कहा प्लीज क्लैरिफाई सर, आई हैव ऑलरेडी explained it. I have already explained this question, Sushil ji. It is in respect of your salary payment. Expenses such as excise duty, property tax, GST are to be reported again, sir. In my view, these expenses are not in the nature of supplies. So, in my view, these should be excluded. Transaction in security, sir. Security is not a good at all. Since it is not a good, there is no supply, there is no question of supply. So, those needs to be excluded as well. Whether supply, sale and purchase of securities exempt or taxable, sir, it is not a supply at all. It is not a supply at all. An item which is not a goods, it is not a supply, right? Money is not a supply. Opening stock figure required to be considered. Guidelines silent on this issue. Very good example, sir. I believe you need to exclude it. You see, they cannot be a double expenditure, even though it is a on expense side, right? But I believe it should be excluded. Not only opening stock, even closing stock also, right? I have already explained it. Sir, any information how the CPC processed the return when mismatch happened between PL and clause 44? Sir, this clause 44 is only for reporting purpose. As far as matching of PL and profit loss count and clause 44 is concerned, CP will not undertake, but only after data crunching or analytical, there may be some pointers to the department, and then they may take up some cases for some cases for scrutiny. Sir, what about CSR expenditure? Sir, again, I believe CSR expenditure is not an allowable expenditure, but since it is an expenditure and it forms part of your balance sheet also, so I believe you need to disclose that also. And according to that nature of expenditure, you can evaluate it. Sir, expenses like reimbursement to employee towards travel expense, do we report exclude? Sir, in my view, it needs to be included. You see, when I say reimbursement, then employees basically is only a conduit. The ultimate supply is between you and the supplier. So you need to look at the nature of the supply. If let's say it is a train ticket, it is a supply from a registered supplier. If it is a auto rickshaw wala, then it is an unregistered supply, and so on and so forth. Also confirm whether withholding tax charged to PL needs to be reported excluded. Sir, again, in my view, it should be excluded. SSC in case of F&O, SSC registered as unregistered. Yes, brokerage is a supply, sir. Yes, clause 44 applicable for lawyer and healthcare who are not covered under GST. In the very first slide, I told you that irrespective of whether your client is registered under GST or not, clause 44 is applicable to all the assessees wherever there is an audit under section 44AB. All statutory liabilities, fee, penalty are to be reported in column 2. Sir, column number 2 includes everything. As far as issued, everything. Only as far as exclusion is concerned, it is for column number 3 to 7 only. Prepaid expenses to be considered invoice-wise or PL-wise. Sir, in my view, it is the PL-wise, not invoice-wise. Because you see, only the amount which is charged to PL, it becomes it becomes expenditure. The amount which is not charged to PL and you have basically shown it as another current assets in your balance sheet, it is not an expenditure. Loss on sale of fixed asset, which column to be reported again, sir? Which it not again, it is the nature of allowance, it is not an expenditure. Prepaid expenditure, I have already explained. Amortization of expenditure expenses, sir. First of all, Swati Mishra ji, if you read at AS26, those were the days when there used to be an item known as amortization of expenses. Now there is no amortization expenses. If you are incurring an expenditure in 1 year, it needs to be charged to the profit loss account in the very year itself. It may qualify for section 35D. That's a different treatment only for the purpose of income tax. But as far as profit loss account is concerned, it needs to be charged to the profit loss account entirely. If you are doing that kind of accounting, I should say, sorry, your accounting is flawed as far as that part is concerned. So if let's say I am doing an expenditure of, let's say, 5 lakh of rupee, and so in crux, there is no concept of now deferred revenue expenditure. Entire expenditure needs to be charged to the PL. So if let's say you incurred the expenditure in the previous year, now you are charging it to profit loss account this year, it is not an expenditure at all. But please look at your accounting. Yes, it is not, if so is the case, it is not as per AS 26. So I have answered all the questions in question and answers window. Let's say if there are any questions in chat window also. Sahil Shendeji, amount in column 2 should be flowing for P. Sir, in my view, what I do is I basically took out my trial balance, and then I plot all the line items in an Excel sheet. And then also, and as far as PL is concerned, revenue expenditures items are concerned. And then before them, I create some columns, whether that item needs to be included, whether that item needs to be excluded. So whatever item needs to be excluded, that will not form part of 3 to 7. And then all those column number 3 to 7 are created, and I create some buckets, and in these buckets, let's say for example, the expenditure of 5 lakh of rupee, and let's say out of that 5 lakh there is an expenditure which is in the nature of schedule 3. So 1 lakh should be excluded. Rest 4 lakh expenditure needs to be disclosed. Then out of these 4, I create buckets for column number 3, column number 5, column number 7. So at the end of the day, when I have done this exercise, I simply take the total and I present those totals in my clause 44. But yes, capital expenditure and revenue expenditure needs to be shown separately. Can you understand why overseas branch expenses which gets merged with Indian book needs to be included? Need not be included? As per understanding, the same should form part of column number 7, right? Madam, what I'm saying is, Krishma ji, that those expenses are not part of GST. Those expenses are not part of GST. So that is why on that basis, I have said that those should be excluded. But if you are including in column number 7, then you may take because it is up to you what kind of position do you take. So whatever position do you take, if you are including it, please disclose it, that because it may inflate your unregistered expenses to such an extent that it may trigger some kind of scrutiny also. So you have to take into account all the cost benefits, and accordingly, please you take your call. Sir, refund made to customer to be reported. Shridanji, I am not able to understand this question. You have to first explain to me what kind of refund you are talking about to customers. Again, you see, it is in relation to, sir, only sales only. So why it should form part of expenses itself? Purchases made from registration cancelled supplier to be reported excluded. Sir, it will depend on the invoices which you have in your hand. If on the invoice there is a GST printed, so in my view, it should be a registered supply only. Purchase of shares, I've already explained. Shares are not part of goods itself. Since they are not part of good itself, it is not part of the supply itself. So it is not, there is no GST, there is no supply, excluded. Loss on sale of asset, I have already explained it. As an auditor, what all documents need to be obtained from the SSC? So I will suggest please read entire para number 82 of Institute's Guidance Note. It explains everything in detail. What kind of information you need, who will prepare this detail, who should check it, how should you check it, and so on and so forth. Even in one point, it says, if you are not able to, or your client is not able to give you the information as per this clause 4, you should also issue a appropriate disclaimer also. What about expenses out of grant? Ravi SG, you have to first need to tell me how do you do that grant accounting? Are you charging those expenses out of grant to your PL? If yes, then yes, you need to disclose it. But I believe the way you have put this question before me, I believe you are making a separate account as far as grant is concerned. So that expense would have been charged to that grant account only rather than going to the PL. So in my view, it should not be there. You see, you need to understand what is expenditure, first of all, right? If expenditure is in PL, it is an expenditure. As simple as that. Purchases made during the year might not be consumed during the year. It won't be part of expenses. Why not, sir? Why not it part with expenses? If you see, ultimately what you're talking about is the consumption, not the purchases, sir. You're talking about the consumption, not purchases. Purchase is an expense. Purchase is an expense. So in case, let's say in your profit loss account, the items appearing as consumption, then sir, you have to make adjustments also. You need to exclude the impact of opening and closing stock, and only the purchases needs to be reported. So you need to make adjustments there, sir. Whether need to give a breakup of ITC availed and eligible separately for purchases made from registered supplier. Sir, I'm not able to understand your question. Need to give a breakup of ITC availed. So let me give you an example. Let's say there is a restaurant invoice of rupees 1 lakh and 5,000 GST, right? Since ITC is not available to me, I have claimed this entire expenditure of 1 lakh 5,000 as expenditure in my PL. The question comes is whether should I disclose 1 lakh or whether should I disclose 1 lakh 5,000. So in my view, since it is charged to PL, it should be disclosed as 1 lakh 5,000 only, and obviously in column number 3. But in case, let's say you don't have the information available with you, whether it is charged to, it is from a registered supplier or an unregistered supplier. So accordingly, you should give a disclosure in your audit report. If let's say the amount is immaterial, then it's okay. If amount is material, that and in your view it's a material, then you either give a disclaimer or do and go the entire exercise on a micro level scale. It's up to you, sir. So I think ये हो गया, ये भी हो गया. Sir, interest expenses on leased asset as per India 16 accounted based on increment borrowing rate can be disclosed. Leased. Sir, I believe the interest expense you're talking about, if you see it is altered, if it is incurred, because I have to see India's AS 116 provisions also. Sir, you have to understand that if it is in nature of accrual only, then it will be called as an expenditure in my view. Otherwise, it is not an expenditure. So you have to, because I have to get back on this question, I have to see first of all, what are the exact provision of India's 116 as far as your question is concerned, only then I can answer this. So so with this limitation, I am answering this question, sir. Sir, what about ineligible ITC, sir? I've already explained this, Raviji. Sir, I have already explained to you that in my the note I have already shown to you. If you look at the note, if you see, I have already disclosed the entire amount in column number 2, right, and excluded in column number 3 to 7. I think already we are 5 minutes past 6 p.m. So if there are no more questions, then I would like to wrap it up. Expenses charged in current year profit loss account is out of prepaid account balance as on 31/3/2021. Sir, I don't think so. You should need to exclude it. You should include it. Since you see, I've already explained you the principle that let's say I have spent 1 lakh of rupee today, and out of that 1 lakh, let's say 75,000 is charged to PL this year and 25,000 next year. So 75,000 will form part of the expenditure only, and 25,000 will form part of the expenditure next year only. So 75,000 you need to disclose this year, and 25,000 you need to disclose next year. Obviously, these kind of adjustment you will have to do. Again, whatever position, if you don't agree with my position, you take position separately, because you see there is no clear-cut guidelines from the institute also or from the department also. So whatever position you are taking, please disclose that position in your auditor's note. So keeping in all the things, that position, the position I am taking seems to be the logical one. That's why I'm following it. So thank you very much for all the viewers who are logged in through Zoom as well as through other social media channels. Thank you very much.